Okay, so I believe we are on. Yeah, give me one moment please to set up the environment, and then I'll go on with the guide. Okay, so this one is going to go like this. Yeah, looks like everything is going on, and the chat here as well. And as always, this one is going to be outside, this one is going to be here, and this one is going to be big enough. Yeah, there we go. So yeah, hello to you all once again. Today I'm going to come with another educational video. In this case I decided to make it about the candlestick patterns that we have inside of trading. Of course, I have to say from the beginning that I don't recommend to use them just like that. You know, I truly recommend them to use them in a combination with a series of other factors, like for example a trender, an oscillator, a time frame approach, support, resistance, and so on. But you know, I'm just trying to show you different type of tools that in the end I hope that you are going to be able to combine them and improve and extend your knowledge that you have as a trader, and you know, give you more and more tools so you'll be able to adapt to any of the difficulties or the issues you are going to have in front of you. So yeah, like I said, I'm going to open here as well. Going to open here as well a notepad, so we can have it like always, so we can have the notes. And in this case, the stuff that we are going to see are going to be the next one. So first of all, of course, what is a candlestick pattern? It's going to be the main one, of course. The bullish, bullish, and how, of course, how to find high probability, bullish reversal setups. At the same time, bearish. Well, but let's put it more beautiful. So bullish reversal candlestick patterns, bearish reversal candlestick patterns. At the same time, how to find high probable bearish reversal setups. At the same time, we are going to speak about indecision candlestick patterns, continuation candlestick patterns, and some guidelines, or better said, Python cheat sheet. So you know, it's going to help you in the end with memorizing, you know, all of these ones. So first thing first, let's go to the candlestick patterns. So you see, initially, to put it like this, when we go on a chart, you can see that we have here bars, candles, hollow candle, Heikin-Ashi line, arrows. Initially the price used to be like this. You know, initially when we had graphs, and if you look like, for example, the articles from 50, maybe even 100 years ago, for example, in the stock market that we had at that moment, or the oil, gold, or whatsoever, we always had an average line, you know, that was telling us the details, you know, about that asset. And in this case, the most used value is always going to be the closed of the, you know, the closed value of the candle. So in this case, what we are representing here is going to be the close of the candle. Let me put Binance instead. Yeah. So in this case, like I said, this is what we had previously, and after that, you know, slowly we started to have the bars itself. And the bars itself, if you noticed, we are going to have 4 elements inside of it. So let's take, for example, let's take this candle from here. You can see that the entry one in this type of the left, this is going to be our opening price. And of course, the highest price that we have from the candle is going to be the high of a candle, and at the same time the lowest price is going to be the low of the candle. And when you see this exit here on the right, this one is going to represent, our close of a candle. And of course, you always have to understand that the close of a candle is always going to be the open on a new candle. So this rule is always going to be available. And yeah, you can see, for example, here we have a bull candle. A bull candle, of course, is going to be defined that the close of a price, so in this case the right one, is always going to be higher than the open price. And the same time, for the red candle, so or a bearish candle. So in this case, the open price, you can see it's superior to the close price, meaning that we have a decrease in the price, of that asset. So yeah, so far, this is pretty basic. However, lately, around, I don't remember exactly, but I do believe that it was the beginning of 20th century. And there was this guy, Steve Nielsen, and this guy bring the Japanese candlestick charting techniques. So in this case, the normal candles that we have here, you can see right now, these are the Japanese candlesticks that have been around, for more than 300 years. So they've been introduced, and since their introduction, they are here to stay, because overall they tend to give a much clearer visual idea of how everything goes, and at the same time, they are much easier to read than any other ones. So yeah, let's get on with it. So initially, like I said, inside of a candlestick, we always have 4 data points. And these 4 data points are always going to be the open, the high, low, and close. I don't want to enter too much into details, but like I said, the open, close, they are pretty self-explanatory. I don't need to enter into that. And then remember, if we have a bull candle, in the bull candle, the open is always below the close. And for a bear candle, the open is always above the close. So these are the main rules. You don't have to stick with these ones, but yeah, I'm just going to enter a little bit inside of it. So let's get on, let's get down to business. So in this case, a bullish reversal candlestick pattern in general signify that the buyers, are in control. So that doesn't mean automatically that you should assume that you should go immediately long when you spot such pattern, because actually it doesn't offer you an edge in the market. Instead, you should combine candlestick pattern with other tools that you can find high probability trading setups. So, you remember this. So this is kind of like alert. I think this one is self-explanatory. It has to be put here. Alert. So, I'm going to remember one more time. The candlestick alone will not give you an edge. You should always combine it with something else, with some other, better say, with some other tool to get a high to get a good edge. Just put it like this. And then when we are going to go down, on this part, I'm going to explain a little bit more on how you can combine this one. So yeah, this would be the first part. So now let's go in some of these bullish patterns that we have. And in general, we are going to start with the one candle patterns. And for example, let's start first with the hammer. So we are going to speak about the hammer. At the same time, it's going to be the engulfing. And then we are going to be the piercing, the tweezer, bottom in this case, and lastly we are going to have the morning star. You are going to see that some of those, they are better than the others and are more common than the others at the same time. So anyway, let's get on with the first one. So we have the hammer. So for the hammer, if you go here in the indicators, for example, and if you write hammer, you can see that the own trading view is going to provide you this candlestick pattern. And if we are going to go in the option for the hammer, from the description, we can see that in general, the hammer candlestick forms when a security move lowers after the open. So we can see we have the lower, we have the open, but then we have such a big low movement, but at the same time, at the end of the candle, we are going to close above, you know. So we had an initial decline, but in the end, you know, it's going to go, still the close is going to be above the open price, you know. So in general, you know, it's best, like I said, to take it in consideration as well, maybe with a good friend. So in general, for example, in the trading view, they provide you a good friend. You can see, for example, in this case, like if you want to use an SMA 50 or maybe SMA 200. So with this one, you can have an even bigger approach. And you can see, for example, with 4 hours, you don't have many of them, but let's maybe first go with 1 hour. And with 1 hour, you can see we have more of them. And you can see, for example, this is a good one. After that, at the same time, I recommend, because I made a bot, and I will give you the details about it, and you can see the details into each one of them, you know, how they perform. So you can see, for example, in this case, another example of it. You see, we had the next candle with we had a bull candle. Again, we have the next candle, a bull candle. So in general, you know, look, this one again as well, we have a bull candle, the next one. So yeah, overall we can see that at least for the last so we have 5 tries, I think, so far in the last month, 1 time per month, and you can see in all the cases except this one. And if we check another one in January, so we have this one, a positive one. So you can see that we have 6 tries. In 6 tries, 5 of them were positive and the other one was negative. I will explain after. But in this case, like I'm telling you, this is going to be one of them. And we are going to enter after in some more details about it. But once again, just because you see a hammer doesn't mean the trend will reverse immediately. You will need more confirmation to increase that odds of a trade, you know. But yeah, let's move on. For now, we have the first one. The second one that we have, like I said, is going to be the engulfing. And one more time, we enter here in the candlestick patterns, for example, as well. We can enter, and if you write here engulfing bullish, you can see that we have many of them. I always recommend, like I said, to use with the detent track. Like maybe, for example, you can go SMA 50 to 100. So in this case, we have the moving average that are going to tell us even better movement. So you can see in case of the engulfment, let's go one more time in the description. So engulfing, bearish, bullish. So in this case, you can see again, it's another reversal. And in general, it found at the end of a given downtrend trend. And it consists of the 2 candles. So we always have the first bear candle. So in this case, this one, which you can see is going to be in size much smaller, you know, than the next bull candle that we are going to have. So it has, you know, a small body, and after that, the next one is going to overtake the body, and it's going to be both a higher close and a higher, a higher low, a lower low, a higher high, a higher close, and you know, kind of everything bigger than the other one. So yeah. And at the same time, like I said, it's always good, you know, to use it in contrast with a moving average. So if we go here, once again, you can see that if we will take this one, you can see that, let's take, for example, again, 10 tries. Let's take the last 10 tries that we have. So you can see in this one, we have the confirmation. This one, it would have been a loss. So this one I think is going to be kind of a small loss. Yeah, it's a loss as well. So 2 losses out of 2. We would have 1 win, so 1 win, 2 losses, 1 win, 3 losses, 2 wins, 3 losses, 3 wins, 3 losses, again 3 wins, 4 losses, 3 wins, 5 losses. So yeah, this is 4 6, 4 7 or 5 7, 6 7. So you can see, for example, we have much more how it's called, you know, confirmations of a bear engulfing than, for example, in the hammer, but we can see it not so probabilistic, you know, in order to do this. So yeah, overall, like I said, overall this one is not so great by use it alone by itself, you know. So yeah, Let's get on. Let's get on with the other one. The piercing. So let's go here, write piercing, and we have piercing bullish. So for example, in case of piercing bullish, we can see that we have here one, and then another one is not so often. This one, it's a little bit rarer. And we can see, for example, if we go with piercing, let's go into the details one more time. As well, we can see we have two candles, but it's kind of different of what we have initially with the engulfing. So you know, in case of the engulfing, the initial candle was smaller, you know, than the next candle that we have for the confirmation. But instead here, the first candle is actually bigger than the next one. So the first bear candle is going to be larger in the body, you know, than the other one. And then of course the second one is going to be a bullish one, and it's going to create that gap and closed more or less at the midpoint, of the first one. So yeah, let's take a look at this one. Thank you, mate. So yeah, let's take a look at this one more time. In this case, we can see that if we use the SMA 50, it's going to give us a confirmation. For example, unfortunately, this other one disappeared. So because this one is already not so common, maybe in this case, when we have something that is very common, yeah, maybe it should be okay to use the both confirmation with the 50 and the 200. But sometimes, for example, there are going to be some situation, like for example this one, because we don't have so many confirmations, and we can go, without any moving average as well. And we can see, for example, we have one trigger here. So in this case, the trigger, it would give us a positive, so it would be a win. And then, for example, if you go in this other one, we can see the same stuff. The next one, it would be a win as well, I believe. No, actually, the next one, it would be a lose. So in this case, it would be 1-1. But this is, for example, like I said, for BTC, USDT, only using the 1 hour. Maybe, I don't know, if I will use 4 hours, let's see if we have a confirmation. Looks like we have one here. And in this case, as well, looks like it's kind of in the break even. So, but I believe if you would use the SMA 50, it's not even going to trigger. So, yeah. Overall, overall they are how they are. Later on, I'm also going to make an automatic system, for all these candles, so you can test them individually and see, how it is their use. I already have something like that, but I'm going to make another version only, for the training of this one. And in this case, we are going to have a close of a candle immediately, so you only test, one candle. However, I believe if you go here, for example, in my profile, and you go in my scripts, you can see that actually I have this one here. I made it recently. So this one is kind of adapted, to the crypto market. And in this case, I don't remember exactly that so we have, this is a little bit more complex, the type of candlesticks that I have. You can see, for example, the rising tree. So this is going to be double and triple candles patterns. Instead, we are using singular or maybe even double patterns. But yeah, later on, I can make for all of these, so you can see for yourself, how they would perform overall. So yeah, let's get on with it. So we saw the piercing tweezer button is going to go right now. Honestly, in case of the tweezer button, I believe it's kind of one of the worst, but it's good, it's good to put it here. Of course, there are going to be much more than all of these ones, but let's make some calculation with this one, because it's so often we can go with a bigger trend. So we can go for the SMA 200. Yeah. So we can see in this case it's still very often. So let's take, for example, the last 10 entries that we have. So we will have one win, we will have one loss, another win, so it's going to be 2-1, 3-1, 3-2, 3-T, 3-3, 4-3, 5-3, 5-3. This is kind of weird because we have those two. I'll put it like a loss. 5-4, 6-4, 7-4, 8-4. So actually, and the last one 9-4. So we can see that for the last half of year, 7 months, we are actually winning by 66% accuracy with this one. So overall, just by using it simply like that, it has the biggest win rate among them all. So in case of the tweezer button, because I'm sorry, I forgot to enter in the explanation. Let's go on the explanation itself, you know, from the trading view, and we can see that that this pattern in general found during, you know, a downtrend. So the first candle is going to be long and red, and the second candle is going to be bullish. And its lows, more or less, you can see that they are kind of on the same level, like from the previous candle, you know, and the current candle. So these virtually identical lows together with the inverted direction, they hint that the bulls, you know, are might going to take over, you know, the market. So overall, you can see overall that so far from all 5 of them that we have here, so we can see that this one is kind of the best one. But yeah, this is just, you know, from the explanation that I'm doing right now. But like I said, I'm going to make, if you guys want, maybe later, well, after I finish the explanation, I'm going to make the bot, you know, for all these candles as well, so you can test them by yourself with all the time frames you want and all the candles that you and all the assets that you want. Okay. So yeah, now let's go with the, I would say, the most complex one that we have so far, because here we have 3 candles, and in general it's a little bit harder to recognize, but that's the good thing that we have, you know, the trading view for, and it's going to provide us all these candlesticks for free. So let's go with the morning star, and we have the morning star here, and one more time let's go in the you know, let's go into the description. So we can see that the morning star, you know, it's like I said, we need 3 candles for it. And in this case, you know, the first one, like always, is going to come with a red body, and it stands, you know, from the downtrend that we have previously. After that, we are going to have a short. In this case, at the same time, it can be a doji. You know, this also at the same time, this middle candle can be a doji that gaps, you know, down on the open. So it's going to go a little bit lower than what it does. And after that, we are going to be waiting for a big green candle, the last one, that's going to gap up on the open and on the close above the midpoint of the body of the first day. So that's kind of, you know, the pattern for it. But like I said, you know, I'm just going through them, but honestly, you don't need to know exactly, you know, all this stuff, because like I said, that's the good thing that we have the technology for, and you know, TradingView is providing, you know, all of this for us. But as you can see, in this case, it's a candle that's a little bit harder to find. Like for example, we can go 1 year in the past, and unfortunately we can see that we have not even one of them triggered, at least for this asset. So if I will go, for example, and instead clear this, and I will use no detection, the same stuff. So we can see that, for example, for 4 hours we have nothing. Let's look, for example, on the 4-day. Same stuff. You can see we are looking in the past for so many months, and unfortunately we have nothing. If I look on the 1 day, oh look, we have one on the 1 day. Finally, we have one. Let's see one in action. So you can see exactly like it's being described. We have a red one, a dodgy one, and then after that you have the one. But in this case, for example, this one, it will lead us to a loss. So unfortunately, not the greatest accuracy from it, and I believe, you know, using the 1 minute or stuff like that, you know, I found it kind of honestly bad. In general, I recommend 1 hour or 4 hours, you know, for these stuffs. Otherwise, you know, it's not kind of worthy, you know, to use it. So anyway, unfortunately for the morning star, we have no detection. So yeah, let's continue. And right now, you know, since we learned about the candles, now how do we find? So we can go here now. How to find this high probability bullish candle reversal? So in this case, like I said, we don't want to trade the patterns in isolation, you know. So instead, we are going to have these rules. If the market is trending higher, then wait for a pullback towards support. Second, if the price pull back towards support, then wait for a bullish reversal candlestick pattern. And the last one, if there is a bullish reversal pattern, then make sure the size of it is larger than the earlier candles, you know. So I know it's a little bit hard to put the explanation on this one because we don't see them entirely in action right now. And I don't know how many of you know how to draw a support or resistance, but I'm going to, like I said, I'm going to pull out this one, and after that I'm going to make some automation so you can kind of have this part and have this edge initially. But at the same time, let's go take one of them. Let's do one example of this. So let's take, for example, because we saw that the most common one of them all, I think it was the tweezer. Okay, so let's take tweezer. The tweezer top. No, we want bullish. Sorry. So in this case, let's use 1 hour. So this 1 hour, like I said, we need a support. So in this case here, this is a resistance when it's appear, because if you noticed, I don't want to enter so much into the details, but you can see that actually this one, it's a resistance for the Bitcoin. It's not a support. The support is going to be somewhere around here down, So this is actually this it would be the support. Yes, my friend. When I'm going to finish it, I will save it, and everybody can have access to it for free, and rewatch them and use them and so on, So. Yeah. I am uploading it, on my. Yeah. I will give the notepad, like always, with it. So instead, look for example these ones. So you can see that, of course, it's still not such a big support zone, but it's a little bit hard because in this case, we don't have, but maybe this one here, maybe this one is close to the support, So maybe this example kind of can, which one it was? Maybe this one can kind of serve us. So in this case, the support is 35,700. So, but this is kind of resistance as well. Well, I'm going to make an exception, and in this case, I can say for. If we don't have the support point, so if we don't have the support part, we can take the confirmation from the bigger moving average. Like for example 50 and 200. In this case are the ones that come with it. Of course they can be modified. So in this case, like I said, maybe we see that the market is trending. So in this case, the market is trending. So one of the correlation, we can see that we look for a bigger candle than normal. So in this case, for example, this candle is not so big. This candle not so big. This one, it can be, but you can see unfortunately this one here with this issue. But maybe, maybe when I'm going to make the automation, all these parts are going to be avoided, and it's going to be actually much easier to do it. But it's good to have there, like a reference, So yeah. One moment, please. And I'm going to enter in the next ones. So yeah, let's continue for now. Let's continue with the bearish reversal candlesticks. So in this case, for bearish reversal candlesticks, we are going to have the shooting star. The next one is going to be the engulfing, but it's going to be, of course, the bearish engulfing. The dark cloud, the fuck are these names? The tweezer, tweezer top. Yeah, here as well. I mistook. Yeah, so the tweezer top, and the last one is going to be the evening star. Well, so yeah, of course, they are going to be the reverse of what I told you initially. So let's go into it. So we have first one, we have the shooting star. Okay, so the shooting star bearish. Give me one moment. So yeah, let's get on with it, with the shooting star. So we can see once again we have the SMA 50 for confirmation. Maybe if you want we can go with SMA 20, and we can see it here. So one more time we can see, let's go with the definition. Sorry for not telling it. So you can see, like I said, it's just going to be the reversal of the, you know, of the, how it's called, of the hammer, you know. So in this case it's a single candle pattern that can appear during an uptrend and opens high while it closes near its open. It trades much higher as well. It can always look like an inverted hammer, you know. So I don't know why they put the name, you know, but it's literally an inverted, you know. So yeah, let's make some calculation with it and see how actually it performs. Sorry for this break, if there's that. Have to answer some emails as well and stuff like that, because they are crucial. So anyway, we can see that, for example, with this case we have 3 signals. Oh no, we have more than that. So we can see that this one, well, I believe this one is I believe this one it would be a loss, a win, a win. What the fuck is this one? This one it would be a loss initially, but you can see after that it triggered a very nice confirmation. And then here a win and a loss. Well, more or less kind of break even if you will trade them, you know, for the short term. If you will trade them for a bigger time frame, you can see that, for example, this one it's a nice reversal. Here not so big, but this one as well have a nice reversal, you know. This one a little bit here, this one as well. So overall, you know, overall they kind of tend to be okayish, you know. Okay. So yeah. Let's continue with the next one now. Let's continue with the engulfing. So we have the first one, then we have the engulfing. We go, but like I said, all this analysis is fastly made, you know, only for BTC USDT 1 hour. So you would need to use, of course, you would need to use much bigger sample, you know, in order to get this one. But it's nice, you know, to have an idea. And this is what we are trying here. We are trying to get an idea. In general, the engulfing one seems to be kind of the worst, you know. You can see we have 1 win, 1 loss, 1 win, 2 losses, 3 losses, 4 losses. If you will trade them in the short term, 3 losses, 2 wins, 3 losses, 2 wins, 3 losses, 4 losses, 5 losses, 5 losses, 6 losses and 5 wins, 7 losses. You can see that overall it's actually losing more than it's gaining. But like I said, in general, you have 2 ways that you can trade them. I'm repeating. You can go for the short term, and when I mean for the short term, you are going to look only for the next candles, or you can go into look, you know, for a bigger time frame, and you're going to adapt accordingly and use a bigger stop loss and look for a bigger movement. Because for example, if you would predict this one, it would be a very nice movement. Or look this one as well here. So yeah, but yeah, we will look into it after that, and we are going to make some adjustments to that one. Yeah, so this would be our engulfing. Let's take a look at the dark cloud. And we can see one more time. The dark cloud, you know, is going to be, it's a 2 candle, you know, so the opposite of the, how it was called, of the piercing. So we can see that in this case, you know, we have a green candle, and after that it has a large and average body. The second one is going to be red and opens on the high of the previous candle, more or less. And in this way it's going to create this gap. You see here we have a small gap. And then of course it's going to close in the midpoint of the first candle, you know. So this one, you can see that it shows a possible shift in the momentum from the upside to the downside, indicating a reversal that might happen soon. And for example, here it happened. Yeah. So let's look into it, and we can see that unfortunately we kind of have nothing for here, you know. Yeah. Might take a little bit to find them, but unfortunately we have no this one because it tends to be rarer. Even with no detection, we can see that we have nothing. So yeah. Tweezer top. This one is going to have much bigger movement. So we saw that the tweezer bottom, it was our best candle, and we can see kind of this one looks pretty good as well. So yeah, let's go in the explanation first. And tweezer bottom, and in this case, like I said, it's a double bottom. So no, this is sorry, twee top. So in this case, you know, on the tweezer bottom we are looking at the lows, and now we are going to look at the highs, and we can see that the high from the bear candle and the bull candle are kind of in the same place. You know, in this way it's going to indicate that soon is going to be, you know, this reversal in the trade. So yeah, they are virtually identical highs, just like the other one is going to virtually identical lows, and you know, they hint that the bears might take, you know, the control on the market. So yeah, and let's make some analysis for this one. We can see we will have a loss, we would have another loss, so 2 losses, we will have a win, and 3 losses, 4 losses, 2 wins, 4 losses, 3 wins, 4 wins, 4 wins, this would be a loss, so 6 losses, 7-5, 7-6 actually, 7-7, 8-7, 9-7, 9-8, 10-8, well, 11-8, 11-9, 11-10, kind of 50-50, you know, kind of 50-50 there. Well, 11-11 we can be here. So yeah, kind of 50-50 we can say. So overall, you know, pretty good pattern, you know, just by it like that. Let's go with the last one, and the last one in this case, for this group, we are going to have the evening star. And just like the other one, you know, in general, it's kind of very hard to find opportunities with this one, unfortunately. But maybe, you know, if you are going to check with another time frames, like 3 hours or maybe 4 hours, I don't know. Maybe somewhere it's going to appear, but in general, you know, it's kind of hard to appear the confirmation, you know, for the 3 candles. When we have 1 or 2 candles, it's much easier, but with 3 candles, you know, it's much harder to find something, and you can see it for yourself. Like for example, we have half a year, and we go into it, we have 1 year, and we have no confirmation, unfortunately, for this one. So yeah, but doesn't matter. When we are going to have the bot, you know, we can make this even easier. So yeah, now that we have you know, all this one, let's look at what we should do to find high probability bearish reversal signals. So in this case, once again I repeat, you don't want to trade them in isolation. It's self-explanatory, like I said previously. So first, if the market is trending lower, then wait for a pullback towards resistance. Second, we are going to have, if the price pull back towards resistance, then wait for a bearish reversal pattern. Third, if there is already a pattern, make sure the size of it is larger than the earlier candles. 4. If there is a strong price rejection, then go short on next candle open. 5. And vice versa for long setups. You know. So yeah, we kinda have them. I'm just going to put only one for the indecision, and in this case for the indecision I'm going to put we can go if you want with spinning top, and at the same time of course it's going to be dodgy, you know. So yeah, give me one moment. Okay. Give me one moment, please. I will take, I need 2 minutes. So I need 2 minutes to answer to some emails. I'm sorry for this. Take a break if you want. Go take some water, some coffee, some juice, make a sandwich or whatsoever. I'm going to take a small break and then I'll come back. Yeah. Hopefully. Okay, so yeah, I have this part done. Yeah, sorry for that. So I'm back. Let's continue with the guide. So we have the spinning tops and the dodges. So let's go here, spinnings. So you see we have the spinning top black and white. So the black spinning tops are candlestick lines that are small, red bodied, and possess a shadow. A shadow, if you noticed, the difference from the from the open until the high and from the close until the low, these are wicks. So these wicks, they are called shadows. And we have, for example, the black signifying a change in the trend, and at the same time we have the white, which as well signify a change in the trend. And at the same, better said, it's an indecision in the market. So yeah, if you put into it, you are going to find a lot of them. So yeah, it's kind of too much information, So instead, what I like to use, and most people kind of found it much better, we have the doji, So instead, you know, the doji, it's much smoother and much cleaner, you know, for this one. So yeah, instead of doji, in case of doji, the same time, we can see that now we kind of have no body at all. So from the close to open, we kind of have no body. Instead, we have huge shadows from the long until close, and from the low until open, or from the low until close, if it would be a red body, and the other one. So at the same time, you know, this one we took out an uncertainty, you know, in the movement, but overall I find out from my experience that they also tend to have a very big change in the trend. So look, for example, if you take this one here, you can see that we had an overall a short trend, but after this one we started to have a long trend. This here as well, you can see that we have a short trend and then we have a long trend, and now we have these indecisions here, which might indicate that right now we are in a side market. So in this case it's going to continue to indicate that we are in a side market. But overall, in some other situation, like for example, look, this one, it was a short, then it was a long. It was a short, then it was a long. Here we have a side market, so we continue to have side market. Here, for example, it would fail, because here it told us it's a short, but after we only had a long for some candles only. This one was a little bit better, and this one as well. And this is, for example, with 1 hour, but if you see, if you are going to go in a bigger time frame, you know, well, actually, never mind. 4 hours. Actually, for at least for 1 hour, looks like it works the best. So look into this one. But you can see overall, when we have as well, when we have indecisions like this market, you know, it can give us a lot of fake information. But yeah, it's a very powerful, but at the same time, you know, you have to be very careful with this one, you know. So yeah, that's kind of what I can have to tell you, you know, for the indecision candle. No. Give me one moment again, sorry for this, guys. So we have this one, and I want to download it. So yeah, let's continue. So now we are going to go in the next ones, which are going to be the continuation candles. And the continuation, sorry, candlestick patterns. And the continuation in general is going to signify that the market is going to continue trading in that same direction. And for this one, so yeah, in these ones we are going to have 4 patterns. So we are going to have the rising 3 method, the falling 3 method, bullish harami, and bearish harami. Of course you have much more than these ones, you know, but for now, you know, I'm going to focus on these ones, and you know, you are going to see it. So let's get on with it. So yeah, let's continue with this one. So we have, like I said, the rising tree method. So we go here, we go on the rising tree method. So you can see this is a 5 candle bullish pattern. So imagine, so far we used, one candle, two candle, or maybe, 3 candles, but now we have 5 candles. So it's going to be harder and harder, to find it. But in general, you can see that initially we had a bull candle, and it's going to be big and long, and at the same time we're going to have 3 short candles with bodies inside the range of the first candle, as you can see here. So at the same time, last candle is going to be green one, and it's going to close above the first one, and by doing that, it's going to tell us and indicate us that we are actually going to go towards a continuation movement of this bull trend. So yeah, let's get on and see how they perform. So we have this one, and let's see if we can find at least one example. Looks like we have one. So look at this one, but let's go a little bit back in the past. You can see we have a big trend, then we have a side market, and after that you can see that after this one we had a very nice long trend of 35%. And then again in this case as well, we have another continuation. You can see it went also for another 15%. So look, again this one, you can see we had a confirmation that we are going to have a long trend, and we can see it went for almost 20%. This one. And this one, for example, if you would use a moving average of 50, but if we will use, for example, the 50 and 200, you can see that, for example, as well, we would have these ones, the initial ones that we have with the other one as well, and then the last one will disappear. But let's take a look without any detection at all and see how it would perform. Well, we can see as well, we would have the same ones. We will have the same ones here. For example, we will have this fake one, and in the past we have this one that, well, kind of bring us something or not. It's up to you if you want to play a little bit more risky. Sometimes it can pay off, sometimes it will not. So better to go with always with a trend. So I believe, yeah, we don't have all of these ones, but we can see with this one we will have a trend detection here. Very nice movement predicted for like 2 weeks of continuation. Here we will have a little bit, this one it will actually be a problem, and then with the other ones as well, very nice smooth movement. So overall a very strong pattern that I truly recommend to take into account for your future trades. Let's continue next, and in this case, so in this case we are going to go with the opposite of this one, and the opposite of this one we are going to see that it's going to be the falling tree methods. So let's go with the falling tree methods, and we are going to go here and let's look at the opposite, and you can see that in this case it's the opposite of the other one. So initially we have the first candle, which is going to be long and red. After that we are going to have 3 short green candles with bodies inside the range of the first candle, as you can see in this picture. And lastly we are going to have a bigger bearish candle that's going to be much higher than the previous one, and of course it's going to, in this case, strongly recommend us that the trend is not going to reverse, and actually we are going to have a continuation of the bear trend. So yeah, let's get on to see how this would have performed. You can see that overall, unfortunately, they are good only for the short movement. So you see, for example, we were being here, we will trade. You cannot expect to have the same percentages for short that you would go for long. That's irresponsible, especially if you will trade a full bullish market, like for example it's crypto or stocks. So in this case, it's much more possible to go for smaller volume, like for example 5% or 10%. So you can see, for example, after this indication, we would have this movement of 7%. If you will take this one, you can see we would have another movement of like around 5%. If we will take the last one from here, we can see that from here to the lowest point, you can see as well we have another 5%. So if you would aim actually to go for the lower movement, you would have no issue with this one, in taking all these profits. And let's take a look, for example, in this one here as well, in the December. Let's go like this. So you can see we would have the trend detection, and after that we will have a movement of 3%, and this one it will have a movement as well of 3%. So in general, I would recommend to go for smaller movements, and especially, but also it depends on the volatility that you have. But overall you should use much smaller values than you normally use for the long trend. But overall you can see that if you lose these small values, you can see that they tend to be pretty damn accurate, to say like this. So yeah, that should do for the for the rising tree and the falling tree methods. Now let's continue with the next one. Now let's continue with the bullish harami. This is going to be an easier pattern because we only have 2 candles for it. So let's go with bullish harami. So well, if I go better here and I will look on the harami. There, harami. So we have the harami bullish. So in this case, let's do like this first so you can see how it looks. You can see that in case of the harami, it's a 2-day candlestick pattern that consists in a small body green candle that is entirely uncompressed within the range of what once was a red body candle. So we can see we have the bull candle here and another bull candle, but in the middle we are going to have a big red candle. So this pattern is usually preceded by a downward trend and indicates a reversal in a bear price movement. So it's a bullish pattern, of course. So let's take a look and see if we have at least one of those for 1 hour. Unfortunately here we see none of them. Let's go 4 hours. Yeah, fortunately nothing. Maybe if I would change, let's change the moving average detection. So unfortunately no, we got nothing here. Yeah, maybe because it's uncommon. Let's take another pair, like for example ATH USDT. Oh look, ATH USDT we have. So we can see, for example, this one it would be a win, this one it would be a loss, this one it would be a nice win. We don't have, but I believe if we would use the moving average detection, yeah, we can see that we actually only have the winning one. So we have a very nice winning one, another winning one, and yeah, we don't have much more. But yeah, overall you can see it's 2 out of 2. So those 2 it would be winning. And the latest one, let's go to the harami one more time, but in this case we want to have bearish. So for these ones, in this case, let's read one more time. So for this one, like I said, you can see that now we have 2 short candles, 2 red candles, and in the middle we have the bull one, the big one. So in general, it's exactly the opposite, of the other one. So of course, once again I repeat, if you would aim to go for the bearish one, like I said, you cannot expect to have the same movements like you would have with the other one. So you would aim for something smaller. Like for example here, we can see this one here. Actually, it had a nice movement of 10%, but initially we have, if you want to go on with reserve, like a 5%. You can see we have here. This one, for example, it would be a loss initially. It would went 7% against us, and after that it went 2.5%. So actually, we would hit with a good risk management. We actually hit the stop loss there, So yeah, look, for example, with BTC USDT, for some reason we don't have it, but if I go BTC USD, with this one we have interesting and weird about how the patterns are being made. But you can, for example, see one win, this one it will be a loss, a win again, and this one, well, 7%, but then again it will win 20%. Yeah, it's kinda there, it's kinda there, 50-50 with this one. So yeah, that's kinda what should do for the continuation. Now let me pull together all of this, and at the same time, of course, I want to make let's make I forgot to put this one. So we have continuation candlesticks, and now we want to have, let's put this one, how to find high probability continuation candlestick setups. So we are going to have a set of rules with this one here as well. Give me one moment, please, and I'm going to tell you. Okay. So yeah, let's continue. We now have, like I said, the rules for the high probability continuation patterns. So these rules are going to be the next one. So first, we are going to look if the market is in a range, aka sideways, like I call it. Wait for a breakout out of resistance. The second one is going to be if the market breaks out the resistance, wait to form a continuation candlestick pattern. If the market forms that continuation candlestick, then go long on the break of the highs, and of course vice versa for the short setups. So instead of resistance we will have support, and we will have the break of the support, and once we have that we are going to go for it. So yeah. Now, like I said, some patterns cheat sheet. In order to memorize, because you are going to be, goddamn man, you are going to give me so many damn candlestick patterns, how the fuck am I going to remember all of them? Well, I'm going to tell you like always. Experience, time, practice is going to solve this one. However, I'm going to share with you some of the most important tricks that you should take into account. So the first is going to be the color of the body. This one is going to tells you who is in control. The second one is the length of the wick that represents the price rejection. And lastly, the ratio of the body to the wicks tells you the full story. So remember, we have the rejection of stuff like that. We are going to enter into the shooting star or in the hammers. You are going to have a full candle continuated by a smaller candle, and at the same time with the full body we are going to have an engulfing or stuff like that. So but overall, I truly recommend that that you should take into account these parts. So yeah, what I'm going to do right now, because I want to take a break and I want to go actually to cycle a little bit with my bicycle, I'm going to save all of these first. I'm going to give to all of you, give me a moment, I'm going to save this file. So I'm going to put this one here. Let me put it on the Discord as well. And I'm going to give to all of you, at the same time, I'll put a file link, and I will give to all of you, to download it. Just give me one moment, please. So okay, so this is going to be Candlesticks Patterns, so we are going to have the data inside of it. Fuck, but why the fuck it put like this? No, I don't like it. Wait a moment. Yeah. So instead I'm going to actually save this one. Save as. So this is going to be Candlesticks Patterns. And now because I save it, I can put it in the as a text there. And now I will go to the file.io and I will allow the file here. Upload. Yeah. load one more time because I lost the link. Lol. So yeah, copy the link. There we have it. So here you have the link if you guys want it. At the same time, I put it in my Telegram and my Discord as well. So you have it there. So we have the candlesticks, you know. And now the next thing I'm going to do, but I'm not sure if I'm going to do it later or if not, we can do it tomorrow. So with all this theory, which I put together and we make all these candlesticks and stuff like that, I'm going to make an automatic script, more or less kind of like the one that I already have. But in this case, I will take all of these strategies and this way we can go into test all of them individually. And that way you can find out, you know, how they actually perform, and you know, you're going to look for the best settings and stuff like that. And at the same time, with time, once I'm going to explain you, for example, how to properly use oscillators or Bollinger and all stuff like that, you can combine them together, you know, with all that notion in order to give you an even better idea and a better edge, you know, on how to succeed, you know, in this market. So yeah, until then, you know, I'm going to keep it like this for now, but yeah, you can expect it either tomorrow or today, you know, depends how I'm going to feel when I'm going to come back, and depends, you know, what other stuffs I gotta do. But one thing for sure, I promise you that sooner or later we are going to do this part as well. So yeah, I hope you guys enjoy this lesson. I hope you learn something new from it. Of course, I didn't enter into all of them because, for example, if you go here in the indicators and you go in the candlestick patterns, you can see that actually there are much more than the ones that I told you. I try to take, you know, the most popular and the most used ones. By myself, I'm using, you know, some of these, you know, some of these combination, especially, you know, the big ones of 3 or 5 candles, you know. The doji as well, it's one of the candles that actually respect a lot and I take into consideration. But yeah, we will look into it, and after that I will try to automate so you can backtest and do all these stuffs. And in the future, the next lesson is going to be to full patterns, you know, like for example, I'm going to start and explain the head and shoulder, the double bottom, you know, all these stuffs, you know, more and more, in order to give you that edge that you are going to have, you know, using the price action from the candles. So yeah, overall, I'm going to leave it here. Like I said, I hope you enjoy it. If you did enjoy it, I truly recommend you to visit my website. You know, and here, for example, you are going to be able to find my Discord and my Telegram group together with all my products. And at the same time, I truly recommend you to follow, you know, my TradingView channel in order to see me when I'm going to be online and all that stuff. Thank you all for watching, and wish you good luck and best of luck to all of you. See you later. Bye bye.